So I will invite on the stage Igor Kostichonok, and I will let him introduce himself and mBank. Yep. The microphone there, and Andrei Raducan is the CEO of Ecofinance. We were supposed to have someone from Vista Bank, but unfortunately they are not joining the panel for the moment. So we should we will prospect a little bit with my two guests here. We will prospect a little bit the consumer lending and the new paradigms of how AI and distribution channels with like embedded finance can enable lenders and consumers at the same time. I would like you to introduce yourselves, and then we will jump into into 2 or 3 questions. I think we will have something like half hour, so it's not really a lot of time when we on these topics are not necessarily easy to discuss. They're complex. Okay, Igor.
Yeah. Okay. Hi, my name is Igor. So I'm SVP of Engineering of mBank. mBank is actually digital banking as a service provider. So we're not directly doing anything with consumer lending, but we're integrating with partners who are offering consumer lending through our platform. Plus, we are building the AI-based products for like credit risk scoring, for onboarding, etc., etc. So, yeah.
Well, hello everybody. I'm on the other side, I would say. So I'm Andrei Raducan. I'm the CEO of Ecofinance Romania. We are a digital lending platform. We are serving individuals. We are offering instant, seamless funding to the individuals, serving the underbanked segment, I would say. So, yeah, very glad that we can touch this kind of topics, because I think this needs to be, and you know, the cooperation needs to be done in the market. I mean, banks not looking really to banks or to the fintechs or to the digital lending platforms in order to boost the consumer lending, I would say. So, yeah, cool. We can do like a dialogue and stuff, because I think it's pretty interesting. Yeah, thank you.
And let me also introduce myself for those who do not know me. I'm the CEO of Lendox, Cosmin Curticăpean. I run a company that is also kind of a SME and corporate loans enabler. We are a credit intelligence service. We make abstract financial information of the companies, and we are able to augment alternative data in order to return results and index on capability of reimbursement of the companies. And not long ago, we started to also look into the consumer lending. We specialize in SMEs, but we do also corporate, and in the last maybe a few months, we started to look also into the consumer lending. So, guys, I lost my voice in the morning. I had no voice. It's good that we are not on the stage outside. It's a bit cooler here. It's good. So I would like you to take the floor, and let's dive into what do you feel that is embedded finance. It's a buzzword, it started quite a long time ago. It didn't generate so much traction into the market, although we see that actually there are situations in which you have embedded finance, although people do not know that they actually do that, and they do not call it like this. There was a panel in the morning with the petrol guys, you know, that they were doing this, and then at the same time you have a lot of discussion on the topic on the fintech space. So let's see how this embedded finance is generating new channels for lenders through your eyes and through your experience. And also, let's try to understand how this invisible, digitalized lending is actually shaping the competitional space for lenders, banks, and other financial institutions. We don't need necessarily to resume to loans, but we can extend to finance in general if you want insurance or anything else.
So maybe I can start.
Yeah.
Yeah. So
Yes, please.
I will start from the finish. What you said about that. So yeah, I think everyone is discussing about the speed of the consumer lending, which I think it's already there. So basically, speed it's there. I think most likely it's about how invisible it is. I think there are steps forward in that, but I will speak from my perspective. The company that it's funding basically the loan. Yeah. So user case, it's looking to embedded finance in different layers or pillars, yeah? So if we are looking to embedded finance, we are piloting right now e-commerce checkout, yeah? In order to shape our credit risk decision making. Also, we are looking to transactions basically based on that in order to reshape, because I'm in the market 18 years, yes, and in the last 3-5 years I see a very big speed in this, and I'm looking to the scoring basically, yes. So we shifted from I would say rigid credit bureau data to more behavioral scoring and to transaction, yes, in order to be fast in decision making, but also to predict, I would say, more the bad actors, yes, more early, fast, yeah. So that it's very added plus in the lending, yes?
I'm sorry to interrupt, but
Yeah.
I want to make it a bit more challenging. You say that you're seeing speed, but then this speed is coming from two directions as I'm looking to the market now. So basically, you have either options where you have underbanked or less banked customers, okay,
Precisely, yeah.
with where you have very high interest rates, and then the risk is actually embedded in the interest rates because, of course, the risk is priced. So then it's simple, and then behavioral and all the rest becomes a bit abstract. And you have the other models which are straightforward, where everybody's fighting for the same number of customers, and the intermediation of the customers actually is not really well done, because at the end, the ones that basically the technology should be coming in the middle and actually generate options for those that are not intermediated,
Of course,
to still have access to let's say, a reasonable cost.
Precisely. I think looking to the clientele, it's more likely some of the big percentage of our customers, which are underbanked, are basically invisible to credit bureaus, yes? If you are looking to the credit bureaus data and you have a more rigid and traditional, which is, yeah, it's proven in the market already, yes? So, you will lose a lot of customers, yes? So, and you want to be not just fast and seamless, but also to be present when the client needs that purchase, needs that funding, yes? So looking to behavior, looking to transaction, adding in this embedded finance perspective, also adding scoring models, maybe digital fingerprint, you reshape your risk model. You will reshape how you are looking to the client. For example, let's have a simple example. If you are a client on Netflix, you are paying your bill to the Netflix, but in the credit bureau, you are invisible. Maybe that client is not maybe offering a credit. That's the discussion. So in this way, we are looking, and we are already piloting this kind of events in order to reshape our conversion, but also looking to the bad actors or the falling angels, falling angels, how we are calling, the ones that are going directly to the unpayment scenarios. So in my perspective, representing the lenders, yes, embedded finance is also about, middle data, yes, and how to reshape my decision making, because we made the transition from manual and slow decision to very fast and instant decision, also based on third party or partners that are basically offering us other information, other angles of information in order to be faster and more clear in decision. And of course, instant, because the client wants also that.
Yeah, I agree with all that was said so far. How I'm looking at it is a bit different. I'm looking at it from a tech perspective. So for me, like embedded finance, embedded banking, embedded lending, however you want to call it, is basically the possibility of a consumer to get a certain goods or services without leaving a certain channel. So let's say, a very stupid example, someone is browsing the Instagram and wants to buy like an Aston Martin DB9 because he's like very much into James Bond. So what's happening basically underneath is we have to see like on every possible source of the user what information we can find. Whether it's like an open source information, if you can find an open source, whether we can potentially connect to the open banking of this customer and see like his whole credit line and his transactions, whether we can see what his purchase history, etc., etc. And based on all this information, we should create like some sort of credit score to instantly decide at this particular moment in time if he'll be able to purchase a certain thing. That's basically for me like embedded finance and embedded payments.
Do you have any examples of maybe lenders or financial institutions that you enabled to do a specific, let's say, top of your list embedded models with mBank?
Mm-hmm. So we're providing, right now we're providing like a standalone lending solution that we built together with our partner, SME Approve. And that's basically lending for small and medium-sized enterprises, which you can integrate into basically anything you want because it's all available through API. Basically, it includes onboarding and credit risk scoring.
We need to discuss, Igor, because we want to touch the SMEs part, so we need to touch the...
I'm sorry. I'm sorry to.
No,
I'm sorry. I'm sorry.
Possible partnership, so.
I will wash my hands afterwards.
I want to propose you guys something because the room is quite small, and maybe if you have any questions during we are talking, then I'm coming with the microphone to you, and it would be great if you want to join the conversation. If you have any questions or you want to say something, please just raise hand. I will come and we can talk about it. So now is the case about embedded models. Do you have any questions on the guests for the guests? Not yet. Okay, so I'll let you think, and then I come back to you. Well, I wanted to touch to continue the conversation a little bit in this field of embedded. Do you have any? Because I really want to understand how do you see and where do you see both of you your performance into integrated under intermediated customers. And of course, here we talk about consumers now, but we can extend to SMEs if you want. We are also, as I mentioned, specialized in that field. So maybe, Andrei, also, what is your favorite example of an existing embedded finance model so that we touch upon something more touchable?
Well, I will, like I said, basically what we already did, yeah, so embedded finance, right now piloting the e-commerce checkout, yeah, so we want to have our product more near, like you said, basically, to be as invisible as we can now, yes, because faster, like I said, it's already there, yeah. We want not to touch the user experience, but in the back to have all the integration with, with the open banking solution that we have. We have the scoring models, yes, to be not seeing about the customer, to have a seamless, eKYC and all the stuff, yes, offering decision making in maybe 2-3 minutes, which is real numbers. But looking especially to the embedded, right now we are piloting this e-commerce checkout. So we want our product, which is a credit line fully revolving, to be on the checkout and the client to be there. On that, we have also bad things that we need to resolve. Yes, it's about client is on a purchase, so the client has different mindset. He will see like they have a financial option, but we are going to our onboarding. So that onboarding needs to be very easy, powerful in terms of fastness and stuff, but has risk, of course, because everyone wants to be fast in decision, but you have fraud risk, you have a lot of things that you need to look on.
I have a curiosity. What is the threshold of the lowest value of a loan that can be actually executed through embedded models due to technology? Let's put it this way. We are talking all about innovation, so I'm trying to challenge you. I mean, is it possible, for example, nowadays, do you think there are any kind of products that could trigger, I don't know, if I'm just connecting my photo camera and I'm now taking it out, or my e-bike, and then it will trigger actually an insurance that it's already with a loan behind for, I don't know, 15 euro, just for the time when I'm using it out, and when I put it back in the room, at home, basically it would cancel that. Do you think these kind of models, can we see them in Europe? Because they exist already in Asia. But,
Yeah, precisely, yeah. I think yes, so that's the pretty simple answer and straightforward. Yes, it could be because, like I said, consumer lending targeting, in my opinion, to be visible. So when the client needs to be easy, convenient, you need to be there somehow. Yes. So
I think it's definitely possible and it's needed. The only problem is the regulator in Europe. So that's what basically slows the tech down. At least in my eyes, I don't see any like technical problems of offering such a solution. Like basically, like, you know, right now, just even to get a health insurance, you get basically like a certain package. It cannot recalculate it on the fly. Let's say it doesn't matter whether you're like doing sports or not, you're getting the same insurance. Like for example, I go for a run every day and someone like lays on the couch every day, we're paying the same amount of money, which is like totally stupid, right?
Yeah, so you're talking now about regulations, but already alternative finance and alternative lending is already in the market, and you have more and more traction on it. So there the like ratio is lighter, right? And so also with the non-banking financial institutions, again, it's lighter. Maybe with the banking, they're using the opponent's money. It's more difficult to touch upon these models. But still, we do not see this model yet in the market. And I think, I'm not sure if the problem is still the profitability or what sits behind these breaks.
I think you touch a good point. It's about profitability, and right now we are also in our business, yes. So we shifted, looking not to revenue to the first loan, but actually the first loan it's a data point set, yes. We are looking more to other data, like I already mentioned, and the revenue based is coming from second cycle or third cycle and stuff. So I think this is the reality. Still you are looking to revenues in the first iteration of the client, where the first loan, first withdrawal and stuff like that. So yeah, I think that is the shift needs to be there. We already saw it. We piloting and we already saw it. Yeah.
And there's also should be a shift like in mentality, because if we talk about the Asia, I'm not sure about which part of the Asia you were talking about, but some part of the Asia they didn't have this experience of like everything's being established for them when they started to do in fintech. Basically, they started on the green field from scratch. They just did like what they needed at a certain point in time. Which is in Europe it's a bit different. Europe is a bit slow because everything is very well established for like, I don't know, the last 300 years. Nothing has changed since Medici, basically.
Okay, so being conscious of time, I would like to now dive into this shifting of paradigm, and I want your opinion on shifting the paradigm from looking back to the past economical performance of the client. It was for ages now the model where the lending was built upon. We are now seeing more and more, and even us at Lendox, we now look to real-time data, and we try to predict the capability of reimbursement throughout that 360 degrees type of data. How do you think this will improve? And a bit more concrete, if you can get, how do you think it will improve actually this low financial intermediation, especially in Eastern Europe or emerging markets in Europe?
I think we will be dealing with like predictive analytics even more than we were back then. So basically, if you take, like, for example, you have like a person who's like, I don't know, 15 years old with good math grades in school. You can potentially predict that he will go to the good university and start like getting good money in, I don't know how many years, let's say 5 years, right? So you can already basically offer him the products that are better suited for him and that you cannot offer the other people only based on his current state, even if he doesn't make any money as of now. You can basically offer him like a loan for university, because you know with like a 99% chance that he will repay it. So.
Yeah, but just to be very short on this, so for example, machine learning, yes, in our decision making, it's also, we saw that predictability, to predict the credit risk, it's much better, yes. For example, like I said, we have a lot of guys that are invisible in the credit bureau. So if is no credit bureau there, it's a big question mark. We need to look in other direction. Could be open banking solution that we are looking. Could be digital fingerprint, and we can say, for example, has the email created 15 minutes ago. That it's a big bad actor for us. It's a big trigger. So we are looking, and this shifted in the last, I would say, 2 to maximum 3 years. I have the credit risk background, yes? So everyone was looking to credit bureau. Right now, we are looking to more behavioral scoring, how the clients are using, how the clients are looking in the e-commerce part, for example, yes, and we're analyzing that. That's why we need cooperations, because, yeah, it's about transaction, yeah.
Yes, please.
So my question is related to the CCD2, which will be implemented next year. And how do you see this innovation in the embedded finance in the context of the restrictions that are brought now by this incoming legislation? And especially that you were talking earlier about behavioral models that are giving you quite good results, while the CCD2, it's imposing a DTI calculation like in old times using ANAF and credit bureau data. Well, you see the model predicts better, sometimes better than the simple calculation of today's ability of someone to pay instead of the behavior of current year. So how do you see in short, the evolution of embedded finance in the forthcoming restrictions?
Well, I can answer to that, and I think it's on the table, yes. So basically, it's cooperation. So we are working with the guys on the consumer protection, for example, for this directive, European directive that is coming, yes. And agree, looking to enough data, so tax register data maybe 50% of that. You have better models that can predict the income, can predict the real income and the real DTI of the customer. But still, looking to regulations, you need to have data from ANAF, yes, and credit bureau in order to calculate DTI. But I think step forward was already done, yes, through associations, through partnership, cooperation between the market players, and put on the same table or add on the same table the regulator, basically, yes, and understand that on this cooperation we will move the market, the client, to be, even better in terms of capacity of payment, and I think looking to offering the loan with responsibility. I think that is the pretty much essence of the regulator, to understand that if you are faster and seamless, it's not something that you want to push and to be aggressive on the client perspective.
Oh yeah, I agree. I think open banking is not going anywhere, so the banks will be forced to give access to the data of the customer. This will be there anyways, so that's what we can base our credit risk scoring on in the first step. Second step, we will utilize all possible information from the open source, basically.
I think that these challenges are driven by by 3 pillars. So basically, we have technology with some limitations in terms of bias, hallucination of agents now, whatever is happening in the technology part. Then you have the regulator, where you have a slow move and slow understanding of what's going on. You have AI Act, for example, but you have other types of regulations that might actually impact. This is why usually a good trigger for improving the accessibility and the intermediation of customers is also alternative lending, because it's less regulated. And then you have, nevertheless, you have the market-driven needs, because as long as you have a very low financial intermediation, you will need to look to models that will be able to serve the customers. Otherwise, markets and people will be locked in. They will not be able to access loans. They will not be able to access funding. So just because we have only 1 minute left, I would like you guys tell me, what is the next big thing that you're looking 5 to 10 years from now in consumer lending? And you can extend also to corporate lending, so whatever it feels.
So very fast on that. So I will look at 3 to 5 years, basically, the consumer lending to be, and for sure to be invisible. Yeah, we did this with being fast, seamless. The client not seeing too much that we are doing basically, so in front of. But I think more invisible and to be present when the client needs it. That's the pretty much. And I think the whole industry is making progress on that. We need cooperations basically and partnership more, yes, and access to data point in decision making to be fast. But I think yes, the next big thing on the lending, it's about how invisible you are.
Yeah, I think it should be seamless. Plus, it should be. I think it will become very fast. So that I mean, it also goes.
Guys, I'm sorry to interrupt,
Yeah.
Igor, but I'm not asking you from the perspective of how it should be. What I'm asking you is how do you think it will be?
How it will be? Okay, it will be invisible, very fast, and it will be more or less global. It will be cross-market. So you will be like, for example, I will give an example how it's working right now. So if you, for example, move from France to Germany, then you don't have any credit score anymore. I think it will be fixed. So it will be more or less global with a certain index because like different countries have different credit scoring engines and like different credit scoring metrics, et cetera, et cetera. But I think it will be global. Global, seamless, and fast.
Okay, so I guess we are on time. Guys, we have room for one question. So if you have any question, but a quick one, then raise your hand. No? Thank you very much. Thank you, Igor. Thank you, Andrei. It was a pleasure. And let's continue the conversation outside. Anyone that would like to join us for more off microphone conversations, then join us. Thank you very much.
Thank you.
Thanks a lot.